And we are here on January 25th, 2021 for the last trading week of January. For a Forex market analysis, we're going to give you a breakdown of what we're looking for Monday through Friday of this week. We have a bunch of trading signals to go over. So here's our disclaimer, just to remind you that this is for illustrative and educational purposes only. So now let's get down to one little plug. Please subscribe to our channel, Forex Trading Unlocked, on YouTube and Twitch if you haven't already, just so you know that when we're coming up with live stuff and when all our our new trading signals are going on. And with that, let's get to our live active screen. We have the Forex-Trading-Unlocked.com website pulled up with the workstation page all ready to go for you. All right, let's see. We have the Euro US dollar chart here. Let me make it a little bit bigger here. Oops. There we go. Okay, I think you can see that a little bit better now, right? Okay, so how often do you trade? Well, I let the market come to me. That's the question here from Spondy on Twitch. Well, when you see these signals go off, that's when I trade. Otherwise, I don't force anything. You always let the market come to you. So let's see what's going on here. So we had a bearish engulfing line sell signal that was triggered earlier in the month. We came short of hitting our downside target area of $1.1975. This is our target 1 and target 2. Now, interestingly enough, we did have an hourly sell signal that was triggered last week on, what was it, Thursday into Friday, that did come into fruition today and is ending. So right now the euro on its hourly posture is very weak today. So as well as the other currencies, the dollars are getting a little bit of a boost today. So we are looking right now at this as a beginning of another wave lower. So we're looking for this low from last week to be taken out here. This will be kind of a critical pivot for you to watch out for, as well as the high that was set on Thursday of last week. So this $21.96, this would have us getting a little bit more bullish again in the short run, but right now medium term we're neutral to bearish in the short run. We're looking for another test of support down to this $1.20 half area right here. If we can fail and take out this low, that means a lower move high will have been established, another lower move low, which is indicative of what? A lower moving trend, a bear market, and lower moving trading prices. Let's see, Broken Doctor's in there. Hey, how are you doing, man? If you guys got any questions as we're going through this stuff, you just leave them here, and then we will get to them in this webinar. So we're just reviewing the Euro US dollar right now. We still don't have anything really going on with it except for a short that we had already in place on the daily. Let me show you this once again. We have a daily position that was taken in. This was already over a week and a half ago, where we sold $1.2268, and we have $1.22 even as our stop in. So we already have a profit on that one. Our hourly trade from last week, that one already was hit today. We hit both our initial targets here of $1.2133 and $1.2194 or 19 rather, excuse me. So with this bearish action on the day, I don't know if for the rest of the day, I think we might probably be riding the lows to neutral trading. I wouldn't expect very much action right now. We do have some numbers coming out the rest of the week and some news that we're kind of hanging on, especially like what's going on in Europe with between the EU and also the UK with their lockdown measures and stuff like that. So I would assume we're going to see a little bit more under pressure. And now that we have that little lead up, let's go and look at what's going on in the rest of Europe. So we have the British pound USD dollar. All right, we had a sell signal on Friday. This is a dark cloud cover sell signal. These sell signals that I just went over in the euro and now this one are high probable Japanese candlestick patterns, which you can learn how to trade if you read the book, High Probable Japanese Candlestick Patterns, available on Amazon.com. So anyhow, we are getting follow through to the downside. They tried to lift this market higher earlier today and failed. So the way I'm looking at this is still an overall bull in the long term, medium term, and the short run. This is a counter trend sell signal. Now you always want to trade the action, not the reaction, so be very cautious, but this is a low risk sell right here, where you risk the high from Thursday. Right here we're on $1.3745. The sell level was triggered here at $1.3675. So right now you're a little bit 25 pips, 20 pips above below, excuse me, where the entry price is. We took the signal on Friday just before the close. I would say that the euro one is in a much better position. Obviously, it was triggered weeks ago. If the euro does continue to go lower, then would assume that the pound actually will start to see a little bit of a drag. Now, this market is due for a correction. It doesn't mean that I'm bearish to pound US dollar. I think you're going to notice that 2021, we're going to have a lot of trade zone issues where that's what's going to dictate the direction of these different currencies, where it's not going to be just a coronavirus trade anymore. So you're going to have the European trade zone, your Asian trade zone, and also your U.S. trade or North American, South American trade zone. And you'll see this as we get into these other markets. So, all right, so the British pound US dollar, right now we're looking for it to break down to this $34.37 to $33.63 area here in this downside target area. This key pivot level at $1.3524 is huge. Should we take that level out, we're very likely going to hit this downside target area. Will we reach this upward sloping support line that's been holding up the trend? Maybe, maybe not. This is not a very steep trend, so by attrition, we can start to come into it. I think the big thing is that if we take out this key pivot level, that confirms a higher move high and a lower move low, which definitely puts the short-term trend on neutral to pause and definitely has it leaning on support. So we'll be watching this trade. Now, if this market gets above $1.3745, all bets are off. The bulls are in motion, and it's going to be a grind. So it's a tough long. So if you're already long right now, I would say this key pivot level, this is your risk level if you're long. If we make higher move highs, it's probably going to be a grind higher. To the downside, I think that's where you have your most reactionary of a trade that can develop in the short run, especially if we get a short-term turn. I don't see this market stretching the bull like it has or as strongly as it has. I see it being more of a neutral trade as we head into the next couple months, unless the lockdowns really start to hit the UK, which they're all in a little bit of a crisis going on there. There's a big wave in the bond markets across the globe that is starting to shake up where currency pricing is going to be. So no matter how bearish you are on the dollar, which most of the world is, the reality is the economies around the world are in a lot of jeopardy. So, and there's a lot of debt that's is a part of that issue because of the fact that there's a lot of money that hasn't been paid over the past 6 months, going on a year now in a lot of parts of the world. So we'll see how that impacts the currency prices as we go along. We're just looking at it technically. All right, we had a bullish engulfing line buy signal in the US dollar Swiss trade a couple weeks ago in the beginning of the month, and now today, look at this. Now this is significant. When you have the Swiss, which is, you have your three flight to quality currencies. You have the US dollar, you have the Swiss, and you have the yen for the three different trade zones. The fact that we don't have that big of a move in either the pound or the euro, but the Swiss has a big rally, that's a show of strength for the dollar. We fell off of these highs last week. We've been buttoned up, but we couldn't get above this key level of 89.23. This is a good area that if we breach this week, we could see a challenge of this 89.78. We have this upside target zone. This is a medium-term directional target zone. We're not looking for this to rally in a couple days. This most likely, should this be a bottom here, and you already have a potential inverted head and shoulders going on right here, which makes this key pivot level huge. We get above here, odds are we're going to have a breakout that should get us up into this upside target zone. But you're looking at being into March, maybe even into April by the time it gets there. I mean, I don't think you're going to see a rally like this, how this slid here. I doubt you're going to see a big rally like that, especially if the pound and the euro don't start to really bang new lows. Now, if the pound starts to collapse and the euro starts to really hit new lows and takes out our lower target zone, then there's a good chance that for sure we'll see the US dollar Swiss maintain a probably neutral trade once it gets into this area. We're not looking for any run at parity or any major dollar strength, but we are looking for a US dollar rally when it comes to the European trade zone. Now let's go and jump over across the other side of the water. Oops. PY. Okay, let's see. Okay, now we got the signal in right. Okay, so we had a piercing line buy signal that also occurred in this market at the beginning of January that is continuing to give us something to look at. This market overall is a long-term bear. We are just short-term looking for this correction to continue, especially after last week's little turn of events. It's higher today, not as much as the other markets. Remember, we were saying how with the Swiss, that's a flight to quality currency. So is the yen when it comes to the Asian currencies. So this one right here, it gapped open higher. It did come and fill the gap today, so that's good, and it's staying positive. This market, after making a lower move high, made a higher move low. So this is the low that you have to watch out for, the one from Thursday. If we fall from here, odds are this bearish market continues to go lower. Trading above $1.331, though, however, keeps this market very positive, at least where it should start to continue to batter resistance. I don't think it's going to be an explosive rally, but I got every reason to believe that, especially if we take out this 104.41 area, that we will gradually make our way up into this upside target zone here. This is probably the extent of what we'll see. We're not looking for any major bull, but the dollar's been beaten up for quite some time, and it's looking, I think, right now set up for a nice corrective move in the dollar for the next few months. All right. So we have the dark cloud cover sell signal that happened in the Australian dollar. The thing that's holding up Australian dollar, I think, is commodity pricing. You have to realize that since it made this high, it made a higher move low, a lower move high, a lower move low, a lower move high. So that means it's already in a neutral category. This is the area we're looking for it to come down to because of the commodity factor and pricing there. Even no matter how strong the dollar is, it's going to be hard for the Australian dollar to gain strength. So we are negative. We are looking for a failure here of 76.41 to confirm weakness. 74.07 down here is about the extent of our corrective slide if we get one. It has been a fairly steep climb just in the past couple months, even though this has been in a rally for a year now. And that's the other thing, too. Like, we're not trying to call a top. You never try and call a top or a bottom. But for a short-term neutral to corrective period, it's very likely that we could be heading into that, especially as now that we have a lot of Brexit overs, U.S. elections are over, et cetera, et cetera, et cetera. Excuse me. So, New Zealand dollar, U.S. dollar. Now, this one, ironically, after making a higher move low, made its lower move high, lower move low, lower move high, and it's still looking a little bit worse than the Australian dollar. This is probably because of the dominant trade that Australia has with China and them gobbling up their commodities and with the pricing of things right now. New Zealand is also commodity driven, but it's not under... it has a little bit more reason to have a little more volatility. So as far as being such a tight trade, I think that this downside target area here is a little more likely to see a sell-off here. And should you get the New Zealand dollar down in this area, then the Australian dollar probably won't be hitting the dollar or being hit as hard by the dollar. If New Zealand gets down to here, I would expect this to be a very good target zone for it to bounce off of. This was a steep trend. You can see that we've taken out already one trend line here with where we had this low and then this lower move high. Now we made this lower move low. We fall through by attrition no matter what in the next couple days just by going sideways. But this next low is key. If we take out this low here from last week at 70.89, I think you're going to see a nice little pop, hitting support rather. All right, now let's look at the U.S. dollar, Canadian dollar. So the U.S. dollar, Canadian dollar, this has been in a free fall for a year. This one as well, we're looking for a potential, I would say, more neutral trade than bullish trade. Here's another reason being commodity prices are going up, oil especially being one of them. Now we have this issue with the XL pipeline. And that's going to take a little bit longer to, I think, really impact the Canadians as well as the U.S. But it is impacting things. Dollar strength is going to be rough against the Canadian dollar, especially as we start cutting production of oil and we keep doing what we're doing right now in the past couple of weeks. So that's probably why you're getting this lift. I wouldn't expect a major rally in the U.S. dollar, Canada. This is the key area to get above. It's a little jumbly, this band, $1.2841 down to $1.2830, or excuse me, $1.2790. This whole area is going to be really choppy. You can see we're buffing up against it right now. Now the thing you got to take into account is we've been making lower move lows and lower move highs. If we get into this band, we come off of a lower move low and we make a higher move high. That doesn't make us bullish. It means we're bullish in the short run, obviously, but I'd say most likely you'll see a neutral trade develop. Now let's look at the US dollar Mexican peso. We had a buy signal here triggered a few days ago. This is a bullish engulfing line back here, and boy, did it pop. This is the one reason why I think you're going to see more of this dollar correction is solid. This currency has beaten up the dollar for the past few months as well, and this was on a tear against the dollar before coronavirus. But then it got all the way up to, what was it, 25 pesos to the dollar back in the spring. Now here we are riding these lows. I would say in front of spring break and whatever, and the fact that there's the surging of coronavirus is less likely to have tourism going to Mexico. So I think that you're in the short run, you have a really good chance at hitting this upside target zone. We're just below these two key pivots here at 20 pesos, 20.26 pesos and 20.39 pesos to the dollar. This little resistance band here, trading above here, should build, meaning buying momentum would start to fuel a rally that definitely, I believe, could hit this 20.79 peso area. That's when it'll probably run out of gas and go sideways for a little bit. If there is a true rally in the dollar, though, then this would be the reason, one of the markets that will be showing that. We're going to look at the Dixie real quick. So the dollar index, which gave us a bullish engulfing line buy signal back in the beginning of January, so far, as you can see, we made a lower move high, a higher move low, a higher move high, and right now we've made a higher move low. As long as we do not take out the lows set last week in the dollar index, we have a good chance at driving this dollar index up to this 91.73, up to 92.36 as far as the index value is concerned. That would be just in line with what we need to defend this dollar strength, okay? Meaning that the euro, the pound should be under pressure. The Swiss should have a nice corrective move into that one area where I told you we'll probably end up seeing a sideways trade develop, okay? So, and should that occur, I would think that you're probably going to see the same thing happen with the yen, as well as with the Australian dollar and the New Zealand dollar. But we're no longer on that. If you're a dollar bearer, that you are buying all the rest of the world's currencies, there is a divergence. So don't be surprised if all of a sudden you see strength against the Australian dollar, New Zealand dollar, and the yen, and then weakness against the pound and the Swiss and the euro. So, and just also like we have the North and South American trade zones that are, I mean, we're only dealing with 3 currencies there, just like with Europe. The thing is that we will definitely be seeing more of an impact on that trade zone because of, like, you think about coffee, a lot of the commodity pricings. You have a lot of mining in South America. As these things happen, a lot of your lesser currencies like Brazilian Real, et cetera, are going to impact the U.S. dollar as well. You have coffee prices that are rising, potential bad situation for crops, meaning higher pricing for commodities. Brazilian Real being a bull against the dollar doesn't help. So, you know, that's where we'll see if these things start to come back into place. And I think you're going to see that where we are going to see that divergence. And especially you're going to start to see there's not shortages because of shortages. It's going to be shortages up because of pricing that's going to develop as we head into the rest of 2020. So let's go back to the Euro US dollar. As we started out here, we haven't really had much of a movement on the day. A little bit more positive than when we first started. We'll see how things go with that. Let's see, do we have any questions out there? Let's see, no, you guys have any questions on Twitch? Let's see about YouTube, if you guys got any questions over here. No one on YouTube with any questions, huh? Boy, you guys don't have very many questions today, huh? That's crazy. So anyhow, we have all these signals that you guys can look at today. And the question now is what will happen? Well, now remember, today's kind of a quiet day for numbers. We now have finally got the balancing of the inauguration and things like that. So we're going to start to see some stability, I think. And I think we're going to start to see markets free-flowing, which means that we're not going to be so reliant on just the mainstream media push of one view or another. Elections are off the table. Now it's about actions. We have a new president. Let's see what he's going to do. We already have seen some action. And it's definitely starting to send a shakeup. It also has put a stop on the dollar bears being able to pound the U.S. dollar. I don't know if you've noticed this, but the dollar bottom, like we showed you with the dollar index back at the beginning of January. So this is not necessarily the beginning of a big bull market by any means, but we are probably set up to where over the next month or two, it will be in the better interest to follow dollar bulls and dollar bears, and especially as certain commodity pricing start to get out of whack. So we'll see how these things develop. Let's see, Broken Doctor, do you do short-term trades? I do, absolutely. Remember I showed you the hourly trade that we had on here. This was a trade that we put on the 22nd. We had gotten short here. What was it? Yeah, around 4 a.m. Well, it was so that was that was in the middle of the night. Excuse me, back on the 22nd. Kind of rode this on Friday. Took a little heat this morning, Sunday night when the market first opened up, but then it fell out of bed with a nice little move. I mean, it was up at $1.2180. Now it's trading at $1.2135 after hitting $1.2111. That's not bad. Short term, with the way it's setting up on the hourly, we are now done with this trade. So, in fact, this thing here, hourly trade setup, we can start to erase all this stuff. So, yeah, I do short-term and long-term trades. It all depends on the signal. So, for instance, typically I do daily. Hourly I do, but I have a lot more of a systematic method, more of a discounting which keeps me out of more trades and gets me into more trades. So mostly I manage trades though that I'm planning on having on for at least 3 to probably 8 days, sometimes upwards of a couple weeks. I also trade options too and option spreads, so there's time decay that I'm looking to capitalize on. So it all depends, but when I get these signals, that's when I'll jump on them. Like for instance, with this euro US dollar signal, when this bearish engulfing line came in, I shorted this market a couple contracts so I had different targets. So I had these two targets right there. So those are, one's a shorter term, one's a longer term, obviously, trade. The risk was the same on both contracts. At the same time, I also traded in the futures and also some binary options, and I did a credit spread in the futures market as well that I sold, meaning that I took money right off the bat. I knew what my risk was if this market would have rallied, which it didn't. So the credit spreads came out. Those were nice little winners. I already exited those and the futures contract, especially because when we were coming into the election, I didn't want to have that kind of volatility risk. Whereas with the futures pricing versus the cash FX pricings for liquidity. So yeah, so that I think should answer your question as far as how often I trade. But no, I don't just trade just to trade, and I don't just start looking for things for no reason. Like I wait for my setups. I have a plan in place, so when certain signals get triggered, I know exactly how to find my risk, how to define my targets, my trade entry, and then what to do after. It's very robotic, and that's what you have to do and maintain that kind of outlook. So let's see, anybody any other questions? We're 25 minutes into this webinar, so I think we're probably going to lose some people, or no one's going to want to watch it for much longer than this one. So anyhow, since there's no questions, we reviewed all those markets. Oh, actually, you know what? Let us look at one last market. This is something that's very interesting. I know a lot of you guys, you watch the cryptocurrencies. So when you go to our Forex-Trading-Unlocked.com website, when you go on the navigation bar, you go down to, this is just a Bitcoin only page. I mean, you can always put the symbol in on any one of the charts on the site. But look at this, it's pretty interesting. So if you look at this let's get the volume down so you can see this. All right, so the middle of January was right around this time here, right before Bitcoin totally topped out. That's when the dollar bottomed. Then a couple of days later, Bitcoin tops out, and since then it made a higher move low, a lower move high, and a lower move low. So this is the opposite of the dollar index right now, almost. Like it's kind of funny how cryptocurrencies, and especially like Bitcoin and stuff that are heavily watched, they didn't have enough time to have enough data to really gauge the volatility and the order flow of these markets. Now that they're maturing, they're still infants, but they are maturing, you can start to look at these things. So right now you can see that the Bitcoin was up higher on the day and now is falling back, and I think that's probably because of the retreat. In fact, why don't we just check something out here? If we look at the hourly, okay, yeah, so the currency markets opened up, and then the dollar had a nice little rally. So this little spike here in Bitcoin is because of the pause now in the dollar as the trading day starts to unload. But look at how it's fallen back from 34. This is a nice little range. This thing trades like a little, it's crazy. So, all right, well, anyhow, we got that out of the way. So for the Bitcoin, though, let's go to this Dixie chart. So here, this is where it bottomed. And then where it made this higher move low, that's where Bitcoin topped. And now as you can see, this is kind of like this buffering area. It's like the reverse of the Bitcoin chart for this last like week and a half. So a bullish move here for the dollar would most likely mean that the Bitcoin is going to have a little bit of a sell-off. So just to throw that one into here, I'm sure some of you guys look at the cryptos as well. So anyhow, with that being said, I want to thank you guys very much. We're going to have a couple other webinars dedicated to some of these currencies across the day, and we also have a signal that we're going to put up also to monitor. So hang in there. We will be back in just a little